Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Sunday, December 22nd, 2013. The rally that began in 2013 has continued into the end of the year. At the start of the year, S&P futures had pulled back at or near 1350 before auctioning above the earlier year high and trading up above the prior historic high at or near 1570. The initial breakout above the previous historic high witnessed the S&P auction up approximately 100 points before selling off and pulling back in search of support. The sell-off found support at or near what had been the prior multi-year high, the consolidation price level which preceded the breakout to the new high, and the S&P went on to retest the multi-year high just shy of the 1700 price level. Each time the market breaks out to a new high, the financial media is full of irrational exuberance and make the claim that this time it will be different and the market will go on to rally forever. As the chart of last year's trade activity shows, following each breakout to a new multi-year high, the broad benchmark index has sold off from the high in search of support. This has accompanied each of the rallies to new highs, and as we observed last week, after the S&P rallied up to 1812, the S&P sold back down into the trading range, and last Sunday traded down to 1754. Last week's sell-off from the multi-year high represents a 58-point decline, or approximately a 3.2% sell-off. The rationale for last week's sell-off from the retracement back to the multi-year high, as hyped by the financial news media, was fear of Fed tapering. However, when the FOMC announcement was made public and it became clear that indeed the Fed was going to begin tapering its extraordinary, unconventional monetary policy, S&P futures initially sold down below what had been support at 1765 and traded down to 1760, but failed to sell through Sunday's Globex low at 1754. Following the initial sell reaction, the price path reversed and the S&P rallied back up to 1805-1806. On Thursday, we commented that analyzing the price structure that accompanied the rally back up to 1806, the 1795 price level was the near-term support area, and that we expected, following a pullback at or near the 1795 price level, that the S&P would retest the high up at 1806. Following the retest of the high at 1806, we noted that there was statistical high volume at the 1802-1800 price level, and we expected to see the S&P go on to retest the multi-year high at 1812 and possibly extend the trading range up to the maximum likelihood expectation target at 1820. On Friday, after holding support at the 1802 price area, The S&P indeed rallied above the previous multi-year high and extended the trading range up to 1818. After rallying up to 1818 near the end of Friday's session, the S&P pulled back to 1812 at or near what had been the previous multi-year high, the breakout point above the previous resistance. And at the open of Sunday's Globex session, S&P futures gapped above Friday's close, traded above Friday's high, and auctioned up at or near 1820. Coming into Monday's session, we would expect to see the S&P continue higher during the holiday week. Minor range extension would see the S&P auction up approximately 10 points above the 1812 price level. Relative to a Friday's close, the maximum likelihood expectation estimate has been adjusted. The daily range projection estimate is now located at 1829, with the maximum likelihood target at 1835. Minor support is now at 1812, the breakout point, and the pullback level late during Friday's session, and key support is down at 1802, 1800. That concludes our daily recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, visit us online at www.followthebots.com. Log on and join us some morning at the open.